Tesla, the big stock story of today and yesterday. The board of the company confirming that CEO Elon Musk had open discussions last week about taking the company private. We have discussed how this might work financially or might not work financially, but the way this was presented in a one-off tweet and a blog post hours later without a statement from the board until this morning, well, it has all raised questions, of course, about Musk's leadership, corporate governance of the company, and a lot of other questions, too. Joining us now, corporate governance expert and board member at Wynn and Volvo, Betsy Atkins, along with Vivek Wadhwa, distinguished fellow at Carnegie Mellon and Harvard Law, and the co-author of the book, The Driver in the Driverless Car. Thanks to you both for being here this morning. Betsy, let me start with you. I mean, odd to say the least. Does it raise concerns from your point of view in terms of a lack of disclosure, even though it may have been a bit strange to do it this way? Did it actually achieve the required effect by telling everybody everything at the same time via Twitter?
Well, people love Elon Musk because he's an independent thinker. But as a public company CEO, he is a train wreck. He treats his investors and shareholders as if it's a private company, and he behaves like he's the CEO of a private company. And his board, although independent by the letter of the law, really behaves a lot more like a private company board. You've got so many directors with cross relationships, cross investments, that CalPERS said they needed to add 2 directors. So this type of oversight is not what you expect in a public company. And no, this is not consistent with Reg FD. You've heard the SEC, Harvey Pitt, former SEC member, saying that he's got a lot of concerns, and they'll likely get investigated for how they release their information with a tweet.
Well, what do you make then of the board itself, given that you're on a number of public company boards, have been involved as well, I think, in certain situations that required special committees? What is the appropriate response here? Do you think it's odd that we only heard this morning about conversations that apparently began last week?
You know, this board's oversight is very odd. They knew they have a cowboy CEO. He's baited the analysts. He's tweeted before. They should have reeled him in. They should know that they have a rogue here, and they know very well how you have to communicate with the market. So I think that they're essentially allowing friendly fire and enabling all of these class action lawsuits, which are surely going to follow. Derivative lawsuits will occur, SEC investigations, huge distractions. So I think that this has been extremely unusual and unorthodox.
Vivek, he acts like, perhaps according to Betsy, that he runs a private company. He clearly wants to run a private company. Should he and can he actually figure out a way to make that happen?
Yeah, I think that this is the best thing right now, is for him to take the company private. He's built a great company. He's created tremendous value. It'll be the largest venture capital funding round in the history of mankind when he takes it private. And everyone keeps talking about $70 billion. He's going to keep his stock. It's only a small segment of it that is going to be privatized, and he gets control of the company and he can innovate. It frees him up to do what he's best at, which is innovating and changing the world. So this is a wonderful thing that's happening. And as far as his tweets go, we're in the era of Donald Trump. So what if he's tweeting? Everyone does it, and that's how we communicate these days.
Vivek, I got to take issue with your math there, though. He rolls in 20%, maybe he can get employees, but this is not a small amount of money we're talking about. It is gigantic. It would be the largest LBO of all time, or take private, because, in fact, it's hard for me to imagine him actually getting debt financing a la typical leverage buyout. So this is no easy thing for him to do. I think you have to acknowledge that.
Well, Waymo is being valued by Morgan Stanley at, what, $175 billion? Here, we're pricing the company at $70 billion. And Waymo is just the software for self-driving cars. Tesla has that. It has cars which are amazing. I mean, the difference between a Tesla and all the competitors, including Volvo, is the difference between an iPod and a cassette player. So Elon knows what he has here. This thing could be worth far, far more if left alone from the mad forces of the short sellers and the competitors who are trying to drag the company into the mud and distract Elon. So I think he's doing wonderful things, and I strongly support his move over here.
Betsy, in a blog post yesterday, Elon Musk said, first, quote, a final decision has not yet been made. But given the tweets we've gotten, given the fact that he did say that funding is secured, the fact that you do have all this potential speculation that the SEC could start investigating, or you could see investor lawsuits, et cetera, is he now in a corner where the company has to go private?
Well, it would be great if he could actually raise the money, but he hasn't been reliable in coming through with his statements. He's missed his shipments. His operations are a mess. You know, you try to manufacture a complex automobile in a tent out in the parking lot. You know, you've had high exec turnover. You've got whistleblower complaints about safety in the battery factory. So this is not all smooth sailing by any stretch. And, you know, there's no reason to think that he's raised that amount of money, which is gigantic. That would be the biggest go private in American history. We haven't seen the likes. And for him to say he's got the money, you have to wonder, is it really true? He doesn't have a long history of absolutely meeting all of his public statements.
It is interesting to where we would find pools of capital that deep, Vivek. We showed a graphic a few moments ago of some sovereign wealth funds. I mean, Norway has $1 trillion plus. They could do that and really not even think about it. Is that a legitimate way to start speculating?
Well, there's lots of money in the world. And again, you know, compare it to Waymo. I mean, like I said, $175 billion versus $70 million. And then look at the valuations of companies such as Facebook. Look at Alibaba. We're talking about Apple being worth $1 trillion right now. The world has changed. We're comparing this to automotive companies such as Volvo and Ford and GM. Forget it. Their history. We're now in a new era of technology in which you can build something that changes the world. Not only is Tesla going to change automotive and bankrupt some of these companies, it's also going to change the energy industry, storage. The fact is that he's gotten the battery cost to about $100 a kilowatt hour, which we thought was impossible just 3 or 4 years ago. And the cost is going to keep dropping. Within 4 or 5 years, he'll be able to announce $25,000 cars that go 150 miles. Imagine the trauma he's going to cause to the automotive industry when that happens. These things, this is what Elon is working on, and this is why he's considering it, because he knows what he's sitting on. This thing could be worth more than any other company in this entire industry.
All right. He's
well,
yet
there's
to
a
figure out how to
difference
suspend
between
the laws
companies
of
being
finance,
worth
though.
a lot.
Yeah.
Sorry.
Go ahead, Betsy.
There's a big difference between a software company being highly valued and a company that actually has to make a safe automobile that is able to be shipped on time, meet volume requirements. I would not be counting the German automotive competitors out. I would not be counting the American competitors out. You know, I don't think that the market is going to be patient forever with missing shipments, with missing financial projections, with safety issues. Those things are practical issues, Vivek.